Evergrande downgrade forces BlackRock and other institutions to write off billions. Well, hello there, my friends, and good morning on a Sunday, December 12th, 2021. I was planning to take the day off, although we had some interesting news overnight. Cliff High passed along the link that Evergrande downgrade forces BlackRock and other institutions to write off billions. Many of you have been hearing the name Evergrande over the past couple of months, as it appeared they were running into some trouble. And sure enough, after Fitch downgraded China Evergrande and some of its subsidiaries to restricted default status on Thursday, there was for the first time widespread acknowledgement of the Chinese property giant's failure to meet debt obligations. And here you can see some more details of some of the particular bonds and amounts. And what's interesting is that for months, investors have been forced to rely on the validity of anonymous sources who claim via respected publications that Evergrande has been making good on bond coupon payments. Certainly a different era we're in now where stuff like this happens and investors and the investing public don't even know. I mean, different from free and transparent flow of information, open transparency, but Fitch rating downgrade comes just days after S&P Global says default looks inevitable for downgrade. And based on my experience, I'm not inside Evergrande, but does not sound good. And here in coming days is expected the other big three global rating agency, Moody's, my first employer, will also finally get off their ass and downgrade Evergrande. We'll see if they're ever going to downgrade the US like S&P did, and we'll touch on that before we wrap up here today. But what is next? Interesting. Well, Evergrande has officially been labeled a defaulter by one of the world's most respected and most powerful rating agencies. And let's be clear, as someone with experience from one of the rating agencies, that's not really a great title to hold. And I would point out that scene with S&P in The Big Short where they showed that woman who was quite overmatched was actually incredibly appropriate for the true status of the rating agencies. But hey, just another brick in the Wall Street facade. Maybe Ross Benham will check in on this deal soon. Anyway, from here, if Evergrande's directors respecting and acknowledge Fitch's ratings view, the next step would be for them to file for insolvency, which would see the company liquidated. Although China, Evergrande Corp is headquartered in China, but incorporated in Cayman Islands. So we're counting on Cayman Island law. And sure, directors do not believe there is a reasonable prospect the company can avoid debt defaults and thus insolvency. If they don't, then they must act to liquidate. But here is the part that, actually this one. On the other hand, if creditors emboldened by the Fitch downgrade may force legal action upon the company by initiating bankruptcy proceeding, these efforts have involved selling private jets and mansions. Wonder if any JP Morgan executives are losing a property there. Here's the interesting part, though. According to Dr. Marco Meltzer, an outspoken critic of Evergrande, companies like BlackRock, Ashmore, Allianz, HSBC, and UBS own most of the bonds. I was actually bidding for a BlackRock put last week. Did not get filled, but we'll not legal financial advice, just what I may have been doing last week. And here you go. It is also striking that although Chinese real estate giants have been in crisis for a long time, those funds bought additional securities even shortly before Evergrande's insolvency. BlackRock's portfolio, for example, saw a net addition of 31.3 million shares in Evergrande bonds between January and August of 2021. The fund holds 1% of its portfolio assets in Evergrande. There you see HSBC doing the same, but here, that's the best part. Right at the same time when BlackRock was increasing their own role in treason against the country, the globe, through manipulation of the silver market, which is well detailed on the Arcadia Economics channel. You can actually check out the evidence link below, and we'll add that call to BlackRock, where it was quite funny / disturbing to hear them attempt to explain how the price of silver fell 10% on February 2nd, while their own SLV trust reported adding record inflows. So now you can add on to that they were loading up on more Evergrande right before it defaulted. Now we'll see which customers they tried to pawn that off on. I imagine what they'll do is try and use some backdoor trick to pawn it off onto the taxpayers. I don't think they're going to get away with it this time, but we shall see. Also, I've heard this December 28th date floating around out there before, and now we see the debt deadlines continue for Evergrande this month with two key coupon payments due on December 28th. So we will see how that goes. Adding to the pressure is that here, the Joe Biden Let's Go Brandon administration is being so rapidly exposed as a fraudulent group of criminals. This isn't like the presidential concept you were taught growing up where, you know, a couple people run and even if they're complete morons, somebody has to win and they become president. And, you know, George Bush didn't like broccoli, but other than that, he was a nice old man. In reality, not really the way it works, and certainly not with the Joe Biden Brandon administration, because even if they were trying, these guys, the Ponzi is collapsing so quickly that the hot November inflation report that came in at 6.8%, fastest since 1982, now different formula now. So actually could have been the fastest in history if they had not rigged the CPI calculation to make it look smaller. And if you think I'm kidding about that, look up, I believe 2013, or maybe it was 2011, when as means of deficit reduction, former President criminal Obama actually advocating changing the CPI formula. That was the only means of deficit reduction he ever proposed, or anybody in Washington has ever proposed, which is interesting because, as today I mentioned is December 12th, that means on Wednesday that debt ceiling limit comes due. And of course, no talks about spending cuts, which has left us in the position where, as hot as 6.8% year over year inflation is, Friday's report is probably the best the Biden Brand administration could have hoped for, because while virtually every economist expects inflation to stay high for the foreseeable future, well, I would hope so. Some had worried that inflation could have left as high as 7%. Well, since I based my life, investments, and career around silver, I wasn't really worried about that at all. In fact, I know that did you not have such a politicized and criminal CPI metric, it's already well over 7%, as anyone who actually uses the fraudulent dollar currency can attest to. But you can always find some pimp like Bank of America economist Alex Lynn, who said that while it's time to stop calling inflation transitory, he thinks inflation could peak around March or April. Well, Alex, my friend, here's my question to you. Can you tell me who I can contact at Bank of America who can point out why you and JP Morgan are transferring 25 million ounces of silver at a pop? It's over the limits, buddy. So otherwise, why don't you shut your fucking mouth? You too, Joe Biden, and we'll just see if you keep it under 7% next month, or if you are already facing trial for war crimes. But in either case, if you want to know how this whole baby ends, well, there is a book called The Big Silver Short, which consists of audio interviews with 15 of the world's top silver experts, including the stunning interview with Bart Chilton, where he confirmed that Bear Stearns passed over its silver position to JP Morgan. And this was right when silver was at $21. And then he confirms they had a position that was so big, it was over the limit. He gave them a waiver to reduce it for a couple of months, but JP Morgan instead made it bigger. This is simultaneously while silver was falling from $21 to $9. Over the course of 2008, I might add, while there was a physical silver shortage around the globe, even when the U.S. Mint, who got shut down, coincidentally again that summer, finally came back online, they were telling the dealers that their price was about $17.50, while the COMEX said $9. That was before the dealer markup. And anyway, the CFTC under Gary Gensler never found anything wrong with that. And now he's already over there telling people how to regulate cryptos. And Bart really showed himself to be the only one in there with any integrity. And as you can see between Gary Gensler and Ross Benham, we'll just leave it at that. So anyway, how this all boiled up and how it's all going to resolve, which I might add, aside from the fact that the silver market has not popped in the bank's faces, which could be coming soon, it's all laid out here. Bill Murphy, Craig Hemke, David Morgan, Bart Chilton, all the experts, Dave Granzler. And you can get the audio version or the paperback version by clicking by clicking in the link in the description field below. And with that said, stay tuned because it sounds like it's going to be an exciting week on the market.